Welcome to a new video of the swing trading series. Today, as usual, we will be performing a full breakdown on a pair, both from a technical and in order flow perspective. And by the end of the video, you will not only learn exactly which are the best ways to be analyzing the market, but you will also understand which is the best zone to be looking for a potential opportunity on the pair that we will be analyzing. Now, if you're new to the channel, I'm a top holder on the TRADINGVIEW platform and I share free education and analysis on all my platforms every single day. So I really do suggest that you subscribe to the channel so you won't miss out on all this free education. And I will see you in the video. The pair that I want to speak about today is GBP AUD. Now, why do I want to speak specifically about GBP AUD? First, because it is a very interesting pair for a trading opportunity this week. In fact, the pair is very near in providing a good swing trading opportunity to obviously be capitalizing on the next move of the pair. And second of all, because the analysis on it can be very educational. So I want to speak about it to obviously show you some very important concepts that you always have to be applying in your own trading. So without further ado, let's get straight in analysis. First of all, we will be speaking about the pair from a technical perspective by checking what we have on the monthly, weekly, and daily timeframes. And then we will go and see what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. And then by the end of the video, I will also show you from a 4-hour perspective how we can be looking for potential confirmations for a nice trading opportunity to the downside. So without further ado, let's start analysis. On the monthly, what do we have? Now on the monthly time frame, we can clearly see that the market currently has a very strong monthly support at this area. In fact, if we look here what has been going on, we can see that from here the market had started all this huge move to the upside. So this area here is a very strong level of structure support from which the market has started all this move. And now the market is testing again exactly the same area, which obviously is acting as strong demand from which we can expect a move to the upside. What we can also see is that we had a market that was clearly overextended to the downside, because after an impulse in the market, what do you expect? You expect a retracement. So the market here is overextended to the downside from a monthly perspective and in need of a retracement to the upside. So from the monthly, we have two reasons for which we expect the market to give us a deeper retracement, which is an overextension to the downside and a strong demand area. Let's go down on the weekly and see what we have. So from a weekly perspective, we can see a completely different scenario. Why we see a completely different scenario? Because on the weekly time frame, we can see that the previous support, now turn resistance, is exactly the area which the market is currently testing, which is this previous support at this area, which is now turn resistance. Because the last time that the market went to the upside before melting with this very strong bearish candle is exactly this green candle here. And from a level of previous support and outer resistance, you definitely expect the market to give you a shift to the downside. You basically expect the market to reject the area to the downside. And going down on the daily time frame, we can see something even more interesting. We can see that not only on the weekly we have resistance, but also on the daily we have a quite strong bearish pattern. In fact, we have a daily W formation. Now in general, after a W formation, what do you expect? Now, after a W, you expect the market to give you a move to the downside to go and test the previous resistance, which is now turned support, which is the completion zone of the pattern. So the neckline of the formation. Now, in this case, since the W formation is like this, from here, down, up, the previous resistance, which is now turned support, is exactly this area here. Meaning that basically we expect the market to complete the pattern exactly at this area here, meaning that we want to see the market give us this nice move to the downside. So basically we have a bearish pattern with weekly resistance, which is a quite strong combination. So there is a very high probability that the market will actually give us this move to the downside. But that is not enough, obviously, to just take a short, because we need to see what other kind of confluences we currently have. Starting from what we have from a COT perspective, because we always have to check if hedge funds, so the market makers, the big boys in the market, are actually backing up our analysis and trading setups. So let's go and see what they are doing. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next video. Now, starting from the pound, what we can see. Now, on the pound, we can see that with the last report, hedge funds have closed another 300 longs. Obviously, yes, they did close also shorts, but it's been already 3 reports in a row that hedge funds have been closing longs. So definitely they're not interested in the long side of the pound. So we can expect a weak pound, or at least we can expect GBP AUD to give us this move to the downside. And if we go and see what we have from an AUD perspective, what we can see. Now on the AUD, we can see that with the last report, hedge funds have opened another 1,000 longs, increasing net positions to 16.3K. This is a very strong increase because we were here at minus 2K, meaning that we went from having more shorts than longs from an institutional perspective on the AUD, with 59K shorts and 57K longs, to a situation where currently we have way more longs than shorts, with 60K longs and 44K shorts. So definitely the AUD is strong and the pound can be weak. So definitely we can expect this completion to the downside. So now that we know that on the monthly we have support, on the weekly we have resistance, on the daily we have a bearish pattern, and from a COT perspective we can expect weak pound and strong AUD. How we will put all this information into place to actually build a trading setup. Now, as usual, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But the best time frame to look for confirmations and entry is the 4-hour time frame. And what do we currently have from a 4-hour perspective? Now, on the 4 hours, we can see that everything at the moment is still bullish. The market has been creating higher highs and higher lows, and currently all the structure is bullish. Does this mean that we can take a short? Obviously not, because we would be shorting a bullish market. You never want to be shorting a bullish market, at least from a 4-hour perspective. So how we will be approaching this kind of situation with students? Now, as usual, we will be reactive and not predictive. What does it mean? Being reactive instead of predictive means that even though you want to see the market give you this move to the downside, okay? Because we have many reasons to believe that the market should give us this move to the downside. We will not be looking for any shorts until we will see that the market is clearly ready to give us this move to the downside and that we have a good risk to reward for this move to the downside. And a way in which we will be doing that is, as we have just seen, by monitoring price action from a 4-hour perspective. So inside of this zone, we will be waiting for the market to show weakness. So to shift from a 4-hour perspective from a bullish to a bearish market. And only after the market will have shifted from a bullish market as it is right now to a bearish market, at that point we will add GBP AUD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with students with a very good risk to reward and very good probabilities at that point for the move to the downside, completion of the daily W formation, rejection of the weekly resistance, and obviously for the market to complete the pattern. And then from here, we can expect the move to the upside. Why from here? At that point, we can expect the move to the upside because as we have seen from a monthly perspective, we have strong monthly support and we are in need of a stronger monthly retracement from the monthly impulse. But for the short term, this is the move that we can definitely expect. But as usual, trading is reactive and not predictive. So we have to wait for proper confirmations on the 4 hours because until the market will move to the upside, we cannot be looking for the short. We have to wait for proper weakness. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies and then you trade them live with me. In fact, every single day I give you a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all questions that you have every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out, and I will see you in.